MFA First Down Plus program that just released today. As a matter, well, we're today. Recording Friday the 12th, but released today, and
the funds were released for
today.
Claiming them today.
We talked about this briefly last week, but let's get we got really good detail from one of our great local lenders, Joanna Rushing. And tell us what we learned there, Tracy.
So the First Down Plus program is like a third loan to help first-time home buyers get into a home. So the typical Mortgage Finance Authority down payment assistance program here typically covers the first down payment, right, on the house. Now they've released $15,000, flat $15,000, not up to $15,000. It's $15,000 towards down payment for a first-time home buyer. And that what's beautiful about that $15,000 is it does not change your monthly payment. You do not pay interest on that $15,000, right? It's interest free, and it can be forgivable. It's forgivable if you're still owner occupying that house for 10 years.
Got to put all those caveats,
right?
Qualifications and blah blah blah. Everything apply. But it is, it is basically you get $15,000, and that can be used toward
just closing costs.
Just
down payment.
Just down payment.
Totally, all 15 goes towards down payment. It cannot be used for closing costs.
Got it.
But the first MFA loan portion,
the second down payment.
There's the first loan. The second loan is for down payment, and the third is for down payment. Second can do closing costs. What we know, oh my gosh, this is such a good program.
Hold on, let me just say this. The thing with this program, it does allow somebody that qualifies, again, there's income quality, but to get into a home with zero money out of pocket.
I was just going there, and really, in talking with Joanna.
Stole your thunder.
Yeah, that's all right. That's typical. In talking with Joanna, she said most people that are using this program, the First Down plus the MFA down payment assistance program, most of them will be out of pocket $1,000 to $1,500 when they close on the home. And part of that is we have some inspections that the buyer might want to pay for. They're going to put down some earnest money up front that will go towards their closing costs at closing. But she feels like there's still probably $1,000 to $1,500 out of pocket to be in a home. What's amazing, though, is the home price can be up to, even in the low 500,000 range for these programs. But of course, it's based on your income, and there's income guideline limits. So,
when we say based on income, it's not, you have to be under a certain limit.
Right.
I think for two-family or two-person household, it was somewhere around 100,000, right?
I think it was over that, but a little bit. Yeah. So this has to be used in conjunction with the MFA's First Home and First Down programs. It is forgivable, like I said, after 10 years if the borrower continually occupies the home for the full 10 years, does not sell, refi, transfer title, rent out, or otherwise vacate the property. Don't ask me about it.
Yeah, exactly.
Don't ask me how they know.
Yeah.
But I would say follow the rule.
Well, it's for owner occupied. That's, the rent piece. It's not like you can buy it and use it for an investment property.
So let's talk about that, right? Okay, so somebody has to hold it, be their primary residence for 10 years, and they will forgive the $15,000. However, you haven't been paying anything on that $15,000 the whole time because it's a 0% interest third loan on the property. So let's say 3 years from now, you're in a better position financially, or you get married and you have a second income, or you have someone else that can be on a loan with you that you're not married to. And you decide you're going to move up and you're going to buy a home that better fits your lifestyle. And you have to sell this home to do that. All that you have to do is repay that $15,000 when you sell your home before 10 years.
That's a great point, because I think people may be getting hung up on this idea. Oh, I have to stay in it 10 years. It's like, well, okay, no, you don't have to, but you can now get in a home. And, if you sell it in 2 or 3 years, after the equity's built up.
Right. I was going to say, don't you think in 3 years or more from now, you're going to be way ahead on what the value of that house is at that point? So
my crystal ball is broken.
So it's a great program, even if you end up having to repay it
Yeah.
So,
Yeah. I got it.
Okay.
So
That's
anyway,
that's a great
so
loan program.
MFA program, Mortgage Finance Authority, New Mexico Mortgage Finance Authority program. Reach out to a local lender that specializes in these, and or reach out to us at the Venturi Group, and we'll connect you with a lender that can help you do this. Funds are limited, right?
The funds are limited, and so we know that as of today, people are starting to lock in funds for that 15,000. I heard there might be up to 360 people who can benefit from this, and it's across the whole state of New Mexico. This is a state program, right? And there were people already in the process to get an MFA loan who now can add that to what they already had, that it's like bonus money just fell in their lap, right? But who do you know? I mean, listeners, who do you know that is in a position that should be buying a house? I think the minimum credit score I heard is 620.
620. That's it. I mean, there's 619. You don't qualify.
Right.
Period.
But what I know is some of the lenders that we work with regularly that really know this program, they know if you are really close to 620 and just maybe a hair under it, they know a few ways to help you get your credit score fixed quickly and rescore it. If you're just shy of 620, it can happen pretty quickly, probably while this money is still available. So think about it. Who are your friends and family members that should be buying a primary residence right now and taking advantage of an extra $15,000? So that's all. I wanted to say that.
That's all?
It's like,
oh, I know.
Our listeners are the best source to get it out there. They might not be the one that needs this, but they probably know somebody, whether it's a child, a family member, a friend that's renting or living with somebody else that may not realize that they don't have to have 20% down to buy a house.
Yeah.